What if I told you that point 0.1 Bitcoin, about $11,000 today, could fund your entire retirement? And in order for that to work, Bitcoin would have to hit about $15 million a coin. That sounds insane, right? But when you look at the math, the market dynamics, and Bitcoin's track record, it's not as crazy as it sounds. I'm Terrell Higgins, and in a world filled with information, what you're really looking for is transformation. And in today's video, we're going to be tackling one of the most controversial topics in personal finance. Can a fraction of a Bitcoin actually replace your entire 401k account? And no, this is not financial advice. I'm not telling you to invest your entire retirement into crypto, but I am going to be showing you the math, some of the assumptions, and what would have to actually happen for a fraction of a Bitcoin to fund your full retirement. And whether you think Bitcoin is digital gold or digital trash, watching this video could transform the way you view Bitcoin as a portion of your retirement portfolio. Let's get into it. Here's the brutal truth. The average American thinks they need about $1.26 million to retire comfortably. This is based on the 4% rule, where you withdraw about 4% of your account balance annually. That works out to about $50,000 per year. Then you stack on a Social Security benefit of about $24,000 annually, and you're living comfortably in retirement on about $74,000 per year. But here's where things get expensive. So, healthcare costs across your retirement could be over $300,000. You stack in inflation, which eats away at your buying power, and then you live longer than you expected because advances in modern medicine, and you need to save more money for retirement. So realistically, you're looking at about $1.5 million to comfortably retire. For most people, that means saving between 10 and 20% of your income for 30 to 40 years. It's a marathon, not a sprint. Now, here's where Bitcoin enthusiasts get excited. What if instead of grinding away for decades building a conventional retirement portfolio, you could buy zero point 0.1 Bitcoin, about $11,300 today, and it could fund your entire retirement? In order for this to work, Bitcoin's price would have to reach some pretty insane levels. So for a $1.5 million nest egg, Bitcoin's price would have to go up to $15 million. That's 133x from today's current prices of 113,000. And if you just wanted to cover that gap between Social Security and the income that you're going to need, you would still need about $900,000 per Bitcoin. And that's about an 80x increase from today's levels. This all sounds like some kind of fairy tale, but let's dig into the numbers and how this might actually be possible. To understand if Bitcoin can reach these insane prices, we have to understand what Bitcoin is and why people value it. And as an American, you're kind of spoiled. You don't see the majority of its use cases, but there are five major use cases for Bitcoin. The first one is as a store of value. So Bitcoin has been referred to as digital gold. There's a finite supply of Bitcoin that will ever be made, 21 million. It's not controlled by a central government, and you can't just print more of it like the US dollar. So when people are worried about inflation and the devaluing of their money, they actually flee to Bitcoin. The next major use case is banking for the unbanked. There are billions of people worldwide who do not have access to traditional banking systems, but they do have cell phones. And if you have a cell phone, you can have a Bitcoin wallet, and this is banking access on steroids. Everyone can participate in this system. Then it can act as economic insurance. So there are countries that have inflation that is running rampant. Think Venezuela, or they have unstable governments that will seize their assets. Think Russia and those Russian oligarchs that fled at the beginning of the war. You can hide your assets in Bitcoin, and the government can't seize them, and they can't deflate the value of the money that you've made. Then we have cross-border payments. So if you're trying to send $10,000 from one side of the world to the other side of the world, it's gonna take several days and you're gonna incur a bunch of fees. But if you send it with Bitcoin, it happens within minutes with very few fees. And then the last one is just speculation. People are buying it, hoping that it's going to appreciate in value and make them rich. And those people purchasing on the margins is what is actually driving the price up for Bitcoin. Here's something that most people don't understand about Bitcoin's price. Its price is set on the margins. Bitcoin's price isn't set by all 19.8 million coins that are in circulation. The price is set by the small fraction of coins that are traded on any given day. So think about it like concert tickets. For a Taylor Swift concert, there's 50,000 tickets, but only 500 of those tickets show up on StubHub. So whatever price those StubHub tickets end up costing, that sets the market for the other 50,000 tickets. The same thing goes for Bitcoin. So here's why all this matters. For that $15 million price target, you don't need 15 million times 21 million Bitcoin worth of investment to actually hit that price target. You just need the marginal price to slowly creep up to that target. So in 2020 through 2021, when Tesla and MicroStrategies announced that they were buying Bitcoin, they weren't buying the entire Bitcoin market. They were just absorbing available supply, which created price pressure and drove up Bitcoin's price. So if there's an influx of $10 billion, they're not buying all 10 billion of that Bitcoin at today's price. Just because of the limited supply, you're going to get price pressure upwards. So maybe they start at 120 a Bitcoin, then 130, then 150. Now, all Bitcoin is going to be priced at 150,000 a Bitcoin, even though a very small amount of Bitcoin changed hands. But this is a double-edged sword because with that same buying pressure, you can have selling pressure as well. So if these people who've been holding large amounts of Bitcoin in cold storage actually come out and start selling, it could create selling pressure and drop Bitcoin's price rapidly. So this is why you see these crazy bull runs in Bitcoin and you see these dramatic drops in Bitcoin as well. It's this market dynamic of buying and selling pressure on the margins. So could Bitcoin actually hit $15 million a coin? With this marginal pricing effect, it's a lot more plausible than it sounds. So if you look at Bitcoin's current market cap, it's about $2.2 trillion. And that sounds massive until you compare it to gold, which is sitting around $26 trillion. So that's only about 8 to 9% of gold's value. But Bitcoin has several strategic advantages over gold. It's more divisible, it's more portable, there's a finite supply, it's easily verifiable, and it's harder to confiscate. One interesting side note that most people have never heard of is that in 1933, Franklin Delano Roosevelt
actually required private citizens to turn over their gold coins, gold bullion, and gold certificates to the government at $20.67 per ounce. And if you did not do this, you could be met with fines and potential imprisonment. And then 1 year later, they signed another order, making all that gold worth $35 per ounce. This generated significant money for the US government to try and combat the deflation of the Great Depression. And it's actually illegal to hold gold until 1974. That executive order stayed on the books for decades past the Great Depression. In this little sidebar of history, most people don't even realize happened.
So if Bitcoin can even get to half the market cap of gold, that'd be about $13 trillion. And that would drive the price up to about $620,000 per Bitcoin. Here's where the rubber meets the road. For Bitcoin to reach $15 million per coin by 2045, Bitcoin would have to go up 26 to 27% every year for the next 20 years. And that sounds insane until you look at Bitcoin's track record. From 2011 to 2025, Bitcoin has gone up 102% annually. That's right, over 100% every year for the last 14 years. And even if you look at it in its more mature phase from 2015 to 2025, Bitcoin is still going up about 43% every year. So 26 to 27% a year is a lot more modest returns than what Bitcoin has been averaging. So past results do not dictate future performance, and there's some major assumptions that go into this prediction. So you would need institutional adoption of Bitcoin, and we've seen some of this already, but you would need pension funds, retirement funds, sovereign wealth funds, and governments to actually back Bitcoin. And we've seen it with Bitcoin ETFs and some of these corporate treasury companies, but a lot of that investment would have to continue. Then you would need a positive regulatory environment for Bitcoin. So some governments have fully embraced Bitcoin, like El Salvador, which they've made Bitcoin their legal tender, but some governments have not embraced Bitcoin. So India has actually banned Bitcoin, and China has banned Bitcoin on multiple occasions. And in the US, the current president and current administration is very pro crypto, but it would not take much for those regulatory winds to start blowing the other way. Then you will need technology stability. So Bitcoin is one of the first cryptocurrencies. So newer, faster, more efficient cryptocurrencies will be rolling out, and several governments are working on their own digital currencies to compete with Bitcoin. And then the elephant in the room, quantum computing. Quantum computing is going to be able to crack the encryption on every modern computer security system in the world, including Bitcoin. So they're going to have to innovate and have post quantum encryption, as well as the rest of the banking architecture around the world is going to have to adapt to this. And then you would need some sort of continued monetary debasement or economic instability. So around the world, governments are printing currency like crazy, and people tend to want hedges against inflation. So that's going to push people towards Bitcoin. But any economic instability in other places is going to drive people to invest more heavily into Bitcoin. Let's be brutally honest about what can go wrong with this plan. There's a few things. So, volatility. Bitcoin routinely experiences 50 to 80% drops in value, And if you find yourself in the middle of one of these Bitcoin winters and you're trying to retire, it's going to make it very difficult. Then there's the concentration risk of having all your eggs in the Bitcoin basket. You don't want all of your wealth tied to just one asset because if it tanks, you're in really bad shape. Then there's a liquidity risk. So even though Bitcoin markets are large, they're relatively small compared to other assets. So if you need to liquidate for any reason, just the act of you liquidating could cause downward pressure on the price if you've accumulated millions of dollars of Bitcoin. And then there's that regulatory risk, and we've kind of discussed it already, but just because there's a favorable environment for Bitcoin now doesn't mean it's going to stay that way. Governments could ban Bitcoin or they could roll out their own digital assets to compete with Bitcoin. So, what does all this mean for your actual retirement planning? So, here's my take on it. Bitcoin should be a small portion of your overall retirement mix. If you put all your money in Bitcoin, that is financial suicide. I look at Bitcoin kind of like hot sauce. It adds a little spice and flavor to the overall meal, but you're not going to sit down and just drink an entire bottle of hot sauce. Bitcoin's the same way. If that $11,300 is the majority of your retirement savings, don't buy zero point 0.1 of Bitcoin. But if that $11,300 is only a 5 to 10% allocation of your retirement savings, then this could be a potentially solid investment. Because if you took that $11,000 and you invested it in the S&P 500 over 20 years, it'll turn into about 70-ish thousand dollars. And if Bitcoin's price appreciates to $1 million a coin, way more conservative than the 15 million, then it's about $100,000. That's still solid growth. It's not going to retire you, but you could participate in the growth from Bitcoin without over leveraging yourself in this risky asset. Here's another crucial factor to consider, and that's time. So, if you're 25 and you've got 40 years to traditional retirement age, 40 years is a long time for the Bitcoin price to appreciate. But if you're 45 and you only have 20 years, that's a lot less time for compounding to work its magic. And if you are closer into retirement and Bitcoin is the majority of your holdings and it crashes, you do not have a lot of time to recover. So it's important that you manage the risk of the overall allocation to Bitcoin in your retirement and you take into account when you actually need the money to retire. So the approach that I would advocate for is that the majority of your retirement account is in low-cost index funds that track the S&P 500 or the Nasdaq 100, and then a small 5 to 10% allocation of your retirement account should be in more risky investments like growth stocks, Bitcoin, or real estate. And that approach puts you in a position where you have a rock solid retirement plan. And if that small portion of your portfolio outperforms, then you'd have an amazing retirement. It's the best of both worlds, and your risk is perfectly managed. So, can point one Bitcoin actually fully fund your retirement? Mathematically, yes. If Bitcoin hits between 9 to 15 million a coin, would I bet my entire retirement on that outcome? Absolutely not. But you also can't afford to completely ignore Bitcoin. I look at Bitcoin kind of like the lottery. You need to own at least one lottery ticket just in case. If Bitcoin takes off and its price is well over 15 million a coin in 20 years, you're going to be very sad that you didn't buy a little bit of Bitcoin. And I look at it that same way. I don't want all my eggs in the Bitcoin basket, but I do want some small exposure to this new asset with these interesting use cases. And if today's video helped you understand Bitcoin and where its price could potentially be headed, like the video and subscribe to the channel because I'm going to be transforming your finances every single week. Keep getting 1% better every day, and I'll catch you in the next video.